How to enter an impulsive trend on a long time frame. That's what we're going to look at today, guys. So I hope you're doing well. It's a little after 11 a.m. on Friday, June 18th, 2021, and I hope you had a good week. And it was a really good week this week, and there's a lot of impulsive moves, especially we had a lot of risk-off sentiment in the market, and the Japanese yen the last couple of days has really picked up a lot of strength. We'll see if that's maintained, but it is what it is right now, and you can go through your charts. I'm sure you've seen it. All the yen pairs have been selling down this week, with the exception maybe of the dollar yen, because the dollar has been very strong too. But all the other yen pairs have definitely had a lot of downside. And so we won't get into the fundamental reasons why that is, but there are a couple of potential reasons why that is. But so we'll just look at the technical side of it. So I wanted to talk about how you can get into these type of moves that are very impulsive, okay, that you might see on a longer time frame. This is a 4-hour chart, and whether I use the 1 hour or the 4 hour, this is a very impulsive move. And you can see these little minor areas on the 4 here and here. Say, okay, well, maybe those are areas to get in, but it's still not very clear, and there's no way to draw a trend line on this, right? I mean, how are you going to draw a trend line? It's straight down, right? There's just no good way to draw a trend line. And of course, you could just click sell anywhere in here and hope for the best. Now, in this case, it would have worked out because it was so impulsive. But if you're just chasing price, it's just heading down, you just click sell. It could very well just turn and go back up on a large corrective move or a reversal, and then you're going to either get big drawdown or you get stopped out. And so you want to get into those areas of value. You want to get in on the pullbacks, on the corrections, where you get good risk to reward ratio, and you're not chasing price down. Okay. And so I'm using the Swiss yen as one example because you can see the difference here. So on this previous uptrend, you could see, price was, slowly making its way up, and, very steadily, not super impulsive, but it was just kind of drifting higher. We were making higher highs, higher lows. And every time the price came back near this trend line, there were great entry points. You had one here, one here, one here, one here. These are all good places you could have got into this uptrend on this 1 to 4 hour time range. And each one of these moves up would have yielded you at least 100 pips. And so this is this is a good area to fish, okay? But then when you have this break now to the downside, well, you can no longer do this with this trend line because it's just not possible to draw a trend line here. And even on the 1 hour chart, it's the same thing. Now again, you do have these couple little areas right here, but it's hard to really know whether this is the right time to get in, or oh well, maybe this will keep correcting up. Okay, and so the way you want to fix that, is you can probably imagine, is to use a short time frame. And this is where I find using a shorter time frame is advantageous. I'm not necessarily I'm definitely not a scalper, and I don't necessarily I day trade, swing trade. I'm fine getting in and out the same day, and I'm also fine holding trades for a few days too. So but I will use the shorter time frame, say the 5 to 15, to find entries in moves like this that I'm not going to see on the longer time frame, and I want to try to take advantage of some of this. So I'll at least go to a shorter time frame and see if I can find areas of opportunity that I don't see on the longer time frame. So if we go to a 15, you can see I've got some moving averages on here. And these are 21 and a 50 and a 200. And you can set these however you want in terms of whether you want to use simple or exponential or smooth. This one I think is I set for an exponential. Let's just see here. Yeah, this is an exponential. This one's a smooth, and this one's a smooth. But you can really make these however you want. I prefer to put the 21 at the exponential because you can see it hugs price a lot tighter. You see what happens if I change it to smooth or even simple, but let's put it on smooth. Okay, it pulls it away from the price a little bit, and so it doesn't quite give you as many opportunities. You have to have a much deeper pullback, like say this one, but then you're going to probably miss all of this. Where if I change it to exponential the way I had it, you can see it starts to hug price level, and then maybe you get another entry right here. Okay, but again, you can play around with the settings and you can even play around with the length of your moving average. But the point is to go down to this short time frame, and you can find these entries a little bit clearer. Now you could also go down to a 5 minute and do the same thing. All right, you go to a 5 minute and find these same points. So here we are in a 5 minute, and here's where that initial breakout happened, because here was that trend line on the 4 hour that we were looking at. That white trend line is right here. So here's where the downtrend started. Now obviously the best place to get into this would have been right here, right? Had that little push down, we broke the trend line, we came back up, consolidated for a period of time, this is a 5 minute chart, so this is what, a couple hours here, and then boom, down. Okay, and so, but all along here, all would have been entry points in this downtrend. So if you missed this one, you could have gotten in here, you could have gotten in here, you could have gotten in here, you could have gotten in anywhere in here and taken the next leg down. Okay, so the 5 to 15 minute is a good place to go and look for these entry points. Okay, and so I just wanted to kind of point that out to you, because you're often going to see these when you get these big impulsive moves, and you're like, well, where am I going to get in? This is heading straight down. There's no break in the action here, and that's how you can do it. Whereas again, if you're seeing just a normal slow chugging trend like this one, where you can snap a trend line on here, then this is fine. And I actually prefer these, because I like these 1 to 4 hour entries like this, because these are really reliable, and they're going to yield you a lot of pips, but you just have to be able to stay with it, because this is a 4 hour chart, so this is going to go on for a while. But if you're a day trader or you're a scalper, then you can just go to the 15 minute or 5 minute and look for trades that way. So again, I'm not going to the short time frames personally myself to scalp. I'm just looking to fine tune an entry in a very strong impulsive trend, where I cannot draw a trend line to help me, visualize where my entry points will be. Okay, so we can look at another one, the pound US dollar. And again, here on the 4 hour, we've got this really strong impulsive move, and I really cannot draw a trend line here because it's going straight down. But if I go to the 15, well, now I can see all these entry points here, here, anywhere along here, 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 here. All these are all points you can get into this trend. Okay, and you probably see even a few more on the 5 minute. Okay, so the key to this, guys, is you need to do this in a trending market. Okay, moving averages are great tools, but they are killers if you are trying to trade them in a consolidating or choppy price action. You're going to get chopped up, because those moving averages are going to keep crossing each other and crossing through price. You want to see them, basically trending, open up as much separation as possible, and just moving clearly in one direction. And you're not going to know that at first. I mean, because right in here you got all this consolidation going. So this is what I'm talking about, this choppy sideways where the moving averages are cutting through price. They're clearly not trending. They're moving sideways. And then we have this breakout, and now the moving averages start to open. Okay, so even if you miss this initial run, then this will be your entry right in here. Okay, now if we mark this area off, let's just mark off this area and go to the 5 minute. Okay, we gotta turn off the scroll here. So, there's really even on the 5 minute, there's no other entry here if you're using the move average until you get to this area. Okay, so that's why a lot of times the 15 is perfectly fine, but you can fine tune it on the 5 if you want. But I find the 15 with an exponential 21 period is perfectly fine for me. So that's how I like to do it. Put the 21 at exponential, and leave the 50 at smooth, because that gives it a little bit of a buffer. If you get a deeper pullback, you still got that 50 to be kind of your backstop. Okay, so but I have some. But there's a lot of people that'll want to leave them the same, both all simples, all exponentials, all smooth. But again, I do 21 exponential, 50 smooth. But you can play around with it, and it might vary depending on the pair. Some pairs are going to be more volatile, and they're going to shoot right through these, so you might have to adjust it. But play around with it depending what pairs you like to trade, okay? And so, that's kind of what I wanted to show you guys. But like I said, I don't have those on my higher time frames. I still do my top-down analysis. Go back to Swiss Yen. I still like to do my top-down analysis where I'm looking for where I can put a trend line in a trending market. And on this pair, I didn't really see too much on the daily. So then but I can, look starting on the daily, I can see, I noticed this. So I go to the 4 hour and I'll put this trend line on here. And I'll just keep playing the bounces until we get a nice definitive break below, and then I'll trade the reversal. And I did trade this reversal. I got out yesterday about here, so I've missed this last little bit, but I'm okay with that. And I got out because my target was the beginning of this last move of this uptrend, which is right here. So I did get out when it hit the 200 period, and because it was getting late in the week, I just stepped aside. Now this thing might just keep going down, in which case next week I'll be looking for more entries because there's a lot of room to the downside. We're right here. I mean, we could come all the way down here, which is another 350 pips. So this is an example where I will be using the shorter moving averages next week to potentially rejoin this trend, although at some point I think we will get a bigger correction, and so I'm waiting for that to happen. I don't think this thing's going to go straight down another 350 pips without some meaningful pullback here. So, but we'll see. But that's the story with the Swiss Yen. So, like I said, guys, you can do this really on anywhere where you see a strong impulsive move. Let's look at the Aussie Yen. Maybe was another one of those. Yeah, not really. I mean, I guess technically on the Aussie Yen, you had this. Yeah, so I guess this would work. This is the daily chart of the Aussie Yen. And again, we were making higher highs, higher lows, bouncing off this trend line. Then we had this break. And now impulsive move. Well, where are you going to join this? I can't put a trend line on this. You go to the 15. Then now you can see your entry points on this move down. Okay? And that's the way I would play this. And I think this is set. Let me change this to exponential. Yeah. And you can see, it kind of hugs the price a little bit better. And these are your entry points, okay, when it comes back up. And as far as stop loss placement, if you get in on a retest of the 21, I would put my stop up above the 50. Now, some people say, you could just put it at the swing of this at the 21. So when it comes up here, if you go short, put your stop right here. That's perfectly fine too. You just have to remember this is a 15-minute chart, so there's not much breathing room here. If you get any little push up here, you could be stopped out on a wick, and just to have this go in your favor. So that I guess it depends on what pair you're trading. If you're trading a commonly traded pair like Aussie Yen that has a small spread, you can see there's a pretty small spread on here, about 1 pip on my broker, then you could just put your stop here, and 1 pip is not too bad. If you wanted to be more aggressive with your stop loss placement, you could put it up here above the 50 to give this a little bit more breathing room in case it comes up a little more. Especially if you're shooting for a bigger target. If you're just shooting for a 2-to-1, that's probably not a good place to put it because you're going to have to go a lot further. But if you're just going to, you want to just join the trend and just hang on to it, then I would put my initial stop above the 50. So again, you have to just decide, where your comfort level is, whether you want to put it just a couple of pips above this swing at the 21, or whether, as I said, you want to put it up here and give it a little bit more breathing room in between these two trend lines. This is an example right here. Now you technically wouldn't have taken the short here because you didn't get a bearish candle coming back down in here. You had this little tiny doji, but it kept going up. But if you were trying to be clever and you say, well, as soon as it hits the 21, I'm going to go short, put my stop right here, and then go. And then look what happened. It went up 2 more candles, and then it went down. So if you had gone short, say right here, and just put your stop a couple of pips away, you probably would have been stopped out of this only to see it go. So that's what I'm saying. Either you have to wait for that bearish action back to the downside, or you just got to be willing to give the trade a little bit more breathing room. And instead of putting your stop, in here, put it up here, and then it never got anywhere near that, and you would have been fine. Okay, so stop loss placement is very, very important, but some of it really just depends on your risk to reward. How much you're looking to get out of a trade. Are you looking to scalp it? Are you looking to hang on to it for a while? And a lot of it can depend on what time frame you're on, because obviously you've got less breathing room on a shorter time frame. And it also depends on the pair. If you're trading one of the major pairs, this is a better strategy on the major pairs because your spreads are going to probably be pretty low. If this is an exotic pair or a minor pair, this might be a little bit more risky because you have more chances of volatility and a big wick. Times of low liquidity and high volatility, you could be taken out just on a stop run. So you have to be, kind of take all that into account. But again, this is a really good strategy if you want to, especially this strategy is good on the major pairs that have lower spreads. Okay, so that's about all I wanted to say, guys. I'll keep this short. But again, if you're identifying a strong impulsive move in one direction, where you're not getting really any breaks of opposite trend or nothing really worthwhile, and you can't draw a trend line on, say, the 1 hour, the 4 hour, the daily, you just can't draw a trend line, and you're not getting any substantial visual where you can get back into the trend, and you don't necessarily want to trust these areas right here, then going to the 5 to 15 minute chart and putting these simple moving these 3 moving averages on here, especially these two. Exponential 21 and a smooth 50 is what I use, and then just playing these pullbacks into the 21 or the 50 works really well to get you into these trends and at least take some advantage of these moves. Okay, so I'll leave it there, guys. Any questions, comments, concerns, please leave them in the chat below. Hit that subscribe button down here in the lower right corner if you're just finding the channel, and ring the bell notification below so you know when I post a new video, which is only about once a week. I don't do a lot. I probably should do more, but this is what I do. I don't make YouTube videos, as you can tell. So, but hopefully it's useful and helpful. And again, guys, appreciate you watching, and I'll talk to you soon. Have a great weekend. We'll be back next week.